Welcome to In the Know with Steph and Joe. In the Know with Steph and Joe is all about small business development. These two entrepreneurs bring real-life experience, laughter, and, well, just a ton of knowledge on how to build your small business and make it thrive. After all, this is your creation. Now learn how to make it sing. In the Know with Steph and Joe airs Fridays at 3 p.m. right here on 216 The Net. Like, follow Steph's books and Restoration One of Cary, along with 216 The Net on Facebook, and subscribe to the 216 The Net YouTube channel.
Tell the server you know us.
Oh, well, hey, everybody. Welcome in. We're just chit-chatting away. So,
Tell the server you know us. We're gonna get in trouble today.
Yeah.
All right, so who's our guest?
So today we're talking loans and lines of credit, just because we had prefaced last show, we were going to dive deeper into IT security, but our guest unfortunately had to cancel. So thankfully we got a new guest, and we're switching the topic.
Well,
So
Murray was planning on being here.
yeah, well, I guess thankfully he was.
I'm a good Murray.
I guess thankfully he was able to rearrange his schedule and move up to a week early.
Yeah.
So we're talking loans and lines of credit, the differences between those,
Business.
getting not piercing your corporate veil, and seeing how all that shakes out. So, and things that
So many innuendos
Yeah.
to this show.
So Murray, why don't you introduce yourself and let everybody know who you are and what do you do?
Who, what, and where you are.
So it's great to be here. It's great to be anywhere, actually.
I mean,
You know what I'm saying?
where?
So my name is Murray Beaulieu, and I live in New Hampshire. And just full disclosure, I just stopped wearing long underwear. It just temperatures just started getting above 30. So I'm pretty excited about that. And I'm
Wait.
glad to be here.
Time
I'm glad to
out.
be here.
I wear long underwear -0.
-0.
He's up in the Northeast.
Yeah, well,
He
it's
just got above 30.
So like
So now he's-
long underwear is not to me like you're talking 30 degrees above long underwear.
I'm telling you, I guess I'm just too old. I can't handle the cold weather anymore. I wear long underwear from November until like last week. So full disclosure, I know guests wanted to know that. So I like to be fully transparent. So anyway, I live in New Hampshire. I was in the Army for a while. Then I had a 35-year corporate career as a controller for 3 different Fortune 500 companies. Raytheon, you've probably heard of them. Texas Instruments, and a semiconductor company up here in Boston called Analog Devices. And now I'm an entrepreneur. I like working for myself. And I am passionate about showing small business owners how to separate personal credit from business credit. And what we do is we show them how to build a robust credit profile against their EIN and not their social security number. And what that does is it eliminates the need for personal guarantees, which is huge. Talking about piercing the corporate veil, we can go into that in a little more detail. But also, you can get better terms, better lower interest rates, and significantly higher loan amounts. Because what I didn't know up until a year ago, and I'm a career professional finance guy, is there's a whole different rule book for personal credit and business credit. And if you
That
don't
is
know,
speaking to my like core. Actually, I should say that speaks to my wife's core. Because when we went to go take our lock out,
yep,
right, and we went to go get our lock, which is a line of credit, LOC, for those listeners that don't know. When we went to go get our lock, they said, great. Originally, great. You've been in business for a year and a half. Great. what personal business, what personal credit are you running this on? And we went, we don't want one on personal. We want it all on business. So many people don't know that if you want to go and get a line of credit, if your business is not 3 years old, whatever, you're not getting that line of credit unless it's on your personal. So I'd love to hear from you about what you know and the things that we should tell our listeners.
Cool. Yeah. So, everybody needs money, right? Whether you're
100%.
Whether you're like a entrepreneur selling stuff on Shopify, or whether you're Amazon, I mean, everybody needs money, and the money is there, but most business owners don't know how to get to it. There's like a secret code. And if you go into the front door of most banks are in the business of personal guarantees.
Mm-hmm.
Right?
Yeah, correct.
They're in the business of personal guarantees, and personal lending and personal credit. The whole thing is very highly regulated. Very highly regulated. And they'll say it's for the protection of the consumer. But here's a news flash. Banks are not looking out for your best interests. I just want to put that out there.
Let's hang on. Let's start into best interest of the business. What is the best interest of the business?
You need to get money when you need it, right? And you don't want to put your personal assets at risk. So you want to build a profile against your EIN. And let me just wheel it back here a little bit. Most people create an LLC, right? Which stands for what? What's the abbreviation?
Hang on.
Limited liability company. So LLC is limited liability company.
There you go.
Exactly. So now, Steph, chime in. What should I do to make sure my business is legitimate and I can raise money under my business?
Well, no, when you said about creating the LLC, you guys are incorporated. You're not an LLC.
I don't know. I don't know what we are.
It's the same, whatever.
Carrie,
you still have that. You still have layers
on this show.
You still have layers of protection.
Yes.
But yes.
Yep.
Correct. Okay. So
the whole point about limited liability is you don't want to, be liable. Obviously, that's the whole reason, right? So you get an EIN, and there's two ways where your limited liability protection can be punctured or penetrated. One is if you commit fraud.
I love a good penetration.
Yeah. So. Who doesn't? I mean, really. Who doesn't? You threw me off there, man, but that's good. So the one way you can get penetrated is if you commit fraud, and the other reason is if you sign your social security number on an application. Because once you do that, you're pretty much signing away anything that goes wrong on that loan. They can come after you. So not just the business could lose, but everything you own could be lost, because that's what you do. That's why they want your social security number. And most of the time, they're not going to give you an alternative. And most people don't know there is an alternative. But there's a different, like I said, there's different rules. And here's some big. I think it would help, Joe, if you understood some of the differences in personal and business credit, and then we can explain how to deal with that. You ready? Is that a good plan?
Hey, I love this point, and yes, let's dive into it. But don't go too deep. Let's just go
keep it on surface. Yep.
Quick, brief hits on what it is, so that way we can move through this and not, because yes, I understand what the differences are, but I want all of our humans out there to know it too.
And then I'll give you a few ideas of where you can start.
Word
about how you can do it. But you need to know the differences so you know what direction you're going. So let's talk about this hand is going to be personal credit. Everybody pretty much knows personal credit. It starts when you're 18, right? All your financial transactions get tied to your social security number, and they get reported to one of the 3 credit bureaus. And the key word there is that all happens automatically. You don't have any say in it. You don't have to sign anything. You don't have to hit a switch. It just happens when you're 18, right? And out of that, they do some math voodoo and algorithms, and you get a FICO score. And the FICO score is somewhere between 400 and 900. And the sweet spot is about 740, right? And everybody.
I don't know. I think I came up with like a 360 one day.
Okay, so it goes from 300 to 900.
You got to be working hard to get it.
You're groundbreaking. You're
Listen,
groundbreaking.
I worked really hard to get that 360.
Hey, my hat's off to you, man. That's hard to do. Wow. You must be on speed dial for Chase Bank.
I'm not saying what or how or who. I'm just saying.
Don't disclose your secrets. You want to keep that to yourself.
That's proprietary. Don't share.
Yeah. That's intellectual property.
If I want to be the best, how do I get to the best?
So in personal credit, 740, you got to pay your bills and all that stuff, right? 740 is the sweet spot. If you hit 740, banks want to call you, right? If you're below that, they don't want to answer the phone. Business credit's going to be this hand. The scoring is 0 to 100, so it's different. The sweet spot is 80. The credit bureaus are different, right? And the big differences are that with business credit, you have to be intentional. It's not automatic. It's intentional?
What do you mean by intentional?
I mean, you have to work at it to get a good score. It doesn't happen automatically. Why? Because the rules are different. Number one, over 90% of the transactions do not get reported to the business credit bureaus. Unlike personal credit, which is automatic and 100% happens, you have no control over it. In business credit, most of the stuff doesn't even go to the credit bureaus unless you screw up, and 100% of your screw ups go. But if you're doing something, paying off business debt or whatever, over 90% of those transactions don't make it because there's different lenders, there's different underwriting rules. It costs them money and time and effort. They don't do it. They're not obligated to do it, and they're not incentivized to do it. And furthermore, you don't know whether the transactions you're paying are being reported or not, because they don't say, "Look, congratulations on paying off this loan, but we're not reporting it." You don't know, so it's going into a black hole. So unless you know the landscape and the rules, you might not be getting credit for the paying off that loan. And the other thing that's different about business credit is, unlike personal credit, where you hit so much debt, you start to hit a ceiling and your score starts going down, right? Which is exasperated if you're taking business loans and tying them to your social security number. That's hurting your personal credit even more. In business credit, the rule is you have to have a demonstrated ability to pay. That's the rule. And if you do, they want to give you more credit. So it's 180-degree different ruling, playbook. So your goal is to make yourself look, smell, feel, and taste like Walmart to the credit bureaus, the business credit bureaus, so that you can access the money that's tied to your EIN and increase your credit score, and they'll just give you more and more money.
Okay.
But you have to be intentional. You can't, it just doesn't happen automatically. So.
Right. So let's talk about the difference between a loan and a line of credit. So loans, what is the benefit and options for loans, and what is the benefit for line of credit? And then Joe and I would also kind of share our own real world experiences as small business owners that have had and have both items within our business.
Mm-hmm. Mm-hmm.
So there's a whole bunch, another thing I've learned is there are a whole bunch of different kind of loans. Once you get to the sweet spot of 80 on business credit, it opens up the world of a whole bunch of different options for you. But let's just talk about
80 wait, hang on.
The credit
80,
score.
Yeah. So
Okay.
80 being your credit score.
Yeah.
Once you get there, you have set open line kind of as a business, right?
It's the same thing like when your personal credit score is like 780 and above, and you keep getting all those notices in the mail. You're pre-approved for this, and let's give you this and this and that.
Beautiful threshold.
But yeah,
we
so
all hope to
great
get
analogy. That's 100% correct, Steph. Yeah.
Yeah.
All right. Okay.
So
I just
then-
want to make sure that we're all on the same page.
Right.
Yep.
So when you're taking out a loan, we'll just narrow it down because there's so many options. So
Yeah.
option one, you have a secured loan where you're securing it with an asset.
Mhm.
Then you have unsecured loans, and those would grant you different terms and different interest rates. So you have to determine the risk versus the reward depending on
right.
the current market.
That's right.
So
if
we'll
you-
talk. Yeah.
Yep. And if you do it against your EIN, right? If you successfully grow your business credit on your EIN, the secured is against your business, not against your house, which is a big difference. You can secure it against your accounts receivable or against your inventory, depending on your business, right? Or your real estate, if you
Correct.
own property,
Now,
right?
hang on. Let's dive a little bit backwards into that because while we've done this once or twice so far, I want to dive a little deeper. Because when my wife and I started our business, so when we started our business, what we did was we didn't realize that as starting a business, you want to secure your line of credit
Mhm.
right away. Whereas now, when we were 2 years into the business and we said we need a line of credit, we went to go do that, and banks looked at us and said, no way, because you're 2 years in and you're going off of your EIN, right?
Mhm.
So
Well, also certain industries have a harder time getting lines of credit because
100%
of the
time.
average term of payment. So
Correct.
a line of credit usually is they'll look at your tax return, but it's
Mhm.
usually based upon your average receivables, which is usually around, they'll give you up to about 20%, right, Kent?
Yes.
For your line of credit, usually, if you're going to put up your receivables.
Don't put him
But-
under the bus.
I'm no longer.
Sorry. But if your receivables, because of your specific industry, are in, like, you guys have terms of 60 days plus, the bank will not count 60 days plus as collectible receivables.
What
So
I'm
it will
actually
reduce
talking about
that.
is the bank looking at our past 3 years and saying your line of credit, because you're a business that has not been in business for 3 years, which means we do not have enough history to draw enough to procure your line of history. Therefore, we cannot create anything that gives us your line of credit, the history we need to create your line of credit, right? So as far as what we did, when we went after 2.5 years as a business to go in and say, we need a line of credit, the bank looked at us and said, great, love you, goodbye. And that was it. And we did not get a line of credit, right?
I don't know very many banks that will do a line of credit on a brand new business that has no established sales without you co-signing as a liable party.
Oh, that was it. So
Right. So like
That's correct.
what Murray is trying to avoid is for you to not have to be
Yes.
the reliable party, because I don't think really, unless you're going to pay like loan shark rate, I don't think there's really any banks that are going to give a newly established business owner a line of credit without proven sales.
That's correct. She's right on.
Yeah, I'm not looking to.
Yes, Kent.
We have a question
we,
from the audience.
If we go back to 6, 7, 8 minutes ago, Murray said you have to be intentional. For those 2.5 years, you were not intentional in building your business credit score, right?
Was I not?
No, and there are tricks to that. There are ways to do that, but you have to be intentional about it. So a lot of our
Mm.
people into business, as Murray was saying, is we're used to, you make a payment, it gets reported. You make a payment, it gets reported. You miss a payment, it gets reported. In the business world, you have to make sure and be very intentional with the types of accounts that you get, with who reports to Dun and Bradstreet, who,
Yes.
I mean, there's a lot of intricacies in there. Now,
Mhm.
a bank is always going to be very, very risk adverse, right?
Yes.
So we're going
100%.
to want to secure. All right, you only got 2.5 years and you haven't established any business credit. Yeah,
Mm.
you're going to sign your third child away.
Well, how often do banks get burned because of that risk adverse position that somebody can create said picture that the bank wants? I created the picture. I happen to be somebody that could work that picture correctly and do it. However, I created the picture. I can create any picture I want.
Not really, because your tax returns are going to
Right.
be the black and white.
Great. You want to give, if I would have done this right. Thank you, Murray. Thank you. If I would have done this right, I would have walked out of my old job with a line of credit for my business based on my old job that I
That was a
had
personal line of credit.
problem.
Right, that would have been a personal.
Right.
credit.
You can get a
That'd have been
personal line of credit.
No, that would have been based off of that.
They wouldn't have been
personal- all
able to
fair
give
enough.
you the line of
Personal
credit.
line of credit
No,
based off of said old job.
no. Yeah. So it'd be a personal line of credit
That's not a
because
business
your EIN has a specific identifying number associated with it, which would determine what
Mm.
industry you're in. So you went from industry 1 to industry like 15 when you switched careers. So it's not even in the same industry. So there's no way that they would have leveraged any of that. It would have been all personal, and it would have been your house.
No, Murray, this isn't anything unusual, right?
Yeah, sorry, Murray. You got to
Correct.
really understand, like
What
what we're talking about, though, is
90% of what 90% of entrepreneurs will do, right?
No, it's very common. Everything Joe says is, common thinking, but the fact is that
thank you.
it's different. You're not alone, Joe. And there's
Thank
there's
you.
no like manual on this, right? And I didn't learn
Amen.
about this until this year. And I have a 35-year corporate background in finance, so it's not
Jeez,
like
guys.
they don't want you to know this. Now, Steph, she's pretty advanced. She's got it, but
That's what
the
he
point
said.
is that we want people to know this, right?
Oh, don't tell her husband that.
Yeah.
She owes me
So-
a drink. She owes me a drink, by the way. for saying that.
That was the deal.
This is Steph's guest. I just want to make sure we all point out.
But so, right. So, okay. So, for example, like I was telling Murray in the green room earlier today when we had our chat, is that for when I got my business loan for my building that I recently purchased, I didn't do a traditional loan and mortgage because at that time the rates were higher than they are now. They're starting to stabilize a little bit more. So it was more beneficial to me to leverage my accounts receivable against that and take a 10-year unsecured term so they don't have any claim to
The bill.
my AR or my building.
Well done. Well done.
So
Very hard to do if you're doing it right.
it's not really hard to do if you know the right things to present. I have my business is 6.5 years old, so I have these tax returns. I have a percentage of average growth year over year. I can answer and speak their language. So it's easier for me to not get like all kerfuffled and stuff. Like I could talk to,
Just use kerfuffles.
I could talk to, I could talk to IRS agents and not stumble. So since I'm in the industry, it's
also
easy for me to
easier
present.
her to make
It's
up
more
a story.
credibility. Yep.
So easy for you to do, not easy for the normal human to do,
No,
right?
no.
Yeah, but as part
Most
of,
people can't talk spreadsheets and Excel.
but we have clients that call us and are like, hey,
Yeah.
Steph, I'm thinking about buying a truck. What do you think? where do you think I should
How
be
am I
at?
gonna
How
do
much
this?
money do I need?
Steph, I need
So-
to buy a Super Duty.
Right. So first of all, that's what our good friend Murray does. And if you want to connect with Murray, you can see it scrolling along the bottom. You can connect with him at
I
LinkedIn.
guess since
And
we're halfway through, we might as well
or
shout
if you
out.
want to book a call with them, you can do it right there at
Trey
Boucher
solutions.
Solutions.
Ba-dum bump, huh?
That's it. And he will walk you through the specificness, the steps, what you have to do to build that corporate credit.
Right. Because like all of those old school methods are going away where
They're
you
not all going away. Please
they
don't
are
say that.
because
Please don't
if
say that.
you
They're not
want
all going away.
if you
Every
want
one
to
of them.
consistently
No, I will
show
argue.
no if you
No.
want to consistently show $0 profit or negative net profit at the end, so you want to show a loss at the end of every tax season, banks are not as willing to give you loans and lines of credit because how are you still operating when you're showing $0 or negative dollars in profit? So those old school methods and theories behind that, and having those handshake old school banker deals with Kent has to know because he's been in the industry for a few years. So he knows
I goddamn
how it is.
love a handshake deal, though. Some
Right,
of my
but,
best
like,
deals were done over a handshake.
all of that kind of stuff
So-
as it pertains to lending, especially after the '08 crash and all of that stuff. And those banks took back over so many properties and took so much, whatever. I mean, they got bailed out, so it was fine, whatever. But so a lot of those processes are going away, and you need to show those profits in order to get those loans to build your credit as a business to then not have to personally guarantee anything.
See, now,
I'll give you a few tips on where to start. You want me to give
Yeah.
you a few tips where you can do this on your own? A couple things.
Yeah, it's going to be sticky, Eric.
It is, but there's a couple of things and you'd be surprised at what you can get rejected for. So there's there's a bunch of data on your business that has to be in sync between what you registered your company with at the Secretary of State of Illinois, or whatever state you're in, if you're listening somewhere else, Delaware, and the IRS, and your website and your loan applications. And so, for example, one thing that just about everybody we work with, including me, we need to get straight is their business address. You can't have a P.O. box, number one. If you have a P.O. box, it doesn't mean the banks don't think you can't pay the loan back. It means the banks think you could be fraudulent. And they won't tell you.
Wait, hang on, Murray. How often do you check that stuff for your clients, your humans?
Everyone we do. That's part of the
Every single one. So then from there, do you check not just their physical address, but their web address,
Let me just say this.
How often are you reviewing everything they give you as far as information? If they say, hey, this is my web address, this is my physical address, are you going and actually physically checking that? Because back in my insurance days, I used to go and Google every address, Google Earth every address, so I could see the roof.
You could just go on to for Illinois, you just go onto the Good Standing site and it tells you the address of the business is
not just so. That's what I'm saying is I want to know their physical address. It makes sense, but not just that. But then there's the business. Is it a good standing business?
So the point I'm trying to make here is that every address, wherever your business shows up, the lending institution, the credit bureau, is going to see if it all agrees. Not me. We make sure our clients set that up properly to begin with, but I don't go back and check it. Once you set it up, you're good. But most business owners have multiple addresses all over the place. And so, and through no fault of theirs, because they didn't know the impact of that. They applied for their business EIN 2 years ago.
I have a home address. I have a business.
There you go.
Address,
and you don't know what the ramifications are if you don't have that in sync. But if it's not in sync, the credit bureau thinks there could be fraud. A lot of their determination at some of this elementary stuff is not that you can't pay back the loan, but it's fraud. Many loans get rejected because of the inconsistencies of the address, including stuff like if you have an address that says Elm Street here, and over here it says Elm St. period. That could get rejected because it's not in sync. So step one, if I can give this tip, is make sure your address is correct and reflected consistently across wherever you have a presence, including your website, including your bank, including the Secretary of State and the IRS. So we got to get the foundation right. If you don't have that right, no matter what you do on your credit, this just increases the chance that you're going to get a loan. You always want to increase the odds of getting a higher credit score and increasing the odds of getting a loan.
Yeah, Murray, how often do you come across somebody that actually does not get a loan because of these said
discrepancies?
Yeah, discrepancies or inaccuracies.
So good question. I can tell you this. When you get rejected for a loan, they don't tell you why. You just get rejected. So you're sitting there
correct.
And you don't know why you get rejected. So you're going to wait 6 months and reapply. And if you continue to do the same thing, you're going to get rejected again, and you're not going to know why. So my point is, I don't know why someone's getting rejected, but I can tell you that if their addresses aren't in sync, there's a high probability it's going to get rejected.
Could be that possibility.
Could be.
Love that.
Does that make sense?
Yep.
Absolutely, 100%. Murray, we have a question from the audience.
Yeah.
Go ahead,
Yes.
audience.
As the bank, we won't give you a reason. We'll just say, yeah, you know what? At this time, we don't feel that it's a good deal.
Right. And
Right?
you don't know why.
No reason. Or we may just say, yeah, Joe, you know what? We love you. Just don't have the appetite for this loan right now.
Yeah.
Which, being a insurance guy, I love the fact that I could say appetite.
Yeah.
Because it doesn't fit my appetite is totally something that I could easily use.
Yeah.
And I don't have to say anything else. It doesn't fit my appetite.
Yeah, because most commercial lenders are going to be like this. I gave it to the vice president in charge of lending. They said no.
Yeah, sorry, it's out of our appetite. What the fuck is your appetite? Don't care.
Yeah.
So, okay.
So let's talk about.
Steph said something else. I just want to add to this. Steph said something very interesting that I don't talk about enough, is that another thing of this data that has to be in sync is your NAICS. What is it called?
NIAC.
Yeah.
There you go.
Yeah.
And if you could have the wrong. We had a guy. Our first clients was a medical consultant, right? And he had registered with the Secretary of State that he was a charity. Through, and he didn't know why, and he doesn't know how it happened, but he picked the wrong code, and so he was getting rejected for everything because, so that's a great point, Steph. You got to make sure that it's accurate, and then even if it is accurate, there are some of those codes that are less popular with banks than others.
I got a question. I started
when I applied, the bank said, "Boy, we didn't know that you were a nonprofit." I said, "Not by choice."
But I'm bummed.
Starting a new business, and I'm debating on whether I'm a nonprofit or not.
Very good.
Yeah.
Very good.
That's me.
Yeah.
Did you me? Listen, it's called Rumwald's Tab. So you go in and you pay money at a jar at a bar, and you put all the money in, and then at some point they say, "Great, Rumwald feels good enough, and he's going to pay the entire bar tab."
Nice.
Thank you.
You realize that
Murray?
every single person that gives money into that, you have to send them a donation letter for their tax return.
No,
Yes, you do.
That is
If you're a nonprofit,
Nonprofit.
Yeah, you do.
You do.
This is why I brought this up, because I'm not an official. Sorry, Rumwald is not an official business yet, and thus forth, he is not a.
Well, when you
official-
said nonprofit versus,
I
That's-
am not established.
listen.
I'm just fine.
No,
I'm
If,
sorry, Rumwald has not
if
established.
Rumwald
whether or
goes
not Rumwald-
nonprofit, you will have to send donation letters to all of those people so they can
Okay,
write it
so
off on the
Rumwald
taxes.
is officially a
So
for-profit.
listen, all you 20-year-old kids who are drunk right now thinking that this is a good business idea. This is not a good business idea.
This is a gloriously not good business idea. I can tell you it's going to be way more work than you ever want to deal with. But if you want one to jump onto, come on, I have one. You can.
That's a hard pass.
Let me sell you a
Hard.
waterfront property in Arizona. This is gonna be good. Rumwald's Bridge to Arizona
I didn't
waterfront.
say that.
So
Such a jackass.
I'm just saying the insurance that you're gonna need for that, for paying off all these bar tabs and all these things, like you might as well just
It's all cash. There's nothing in writing.
you might as well just.
Yeah, but who covers?
Oh
the
my
tip?
God, Joe, stop talking.
Murray's crying right now.
This is getting
Murray's
worse.
crying.
Stop
No,
talking.
It's all in cash.
Who's
Stop
paying the
talking.
tip?
Don't
What?
stop talking.
Who's covering the tip?
Just the tip.
Yeah.
What happens if
You're
the
paying
IRS
the
is listening?
tip.
Stop saying this is all cash. Like the IRS could be listening. Shut up.
That's
Stop
right.
talking. Where's your lawyer?
Allegedly.
Jesus.
Let's use the word.
Are you a
alleged.
lawyer?
Let's
No,
use
I'm
the
not.
word-
I
Murray's like, why did I come on this show? What did
I
did Joe
can't.
So,
get me?
let me share this with Joe. So when I was a kid,
Steph invited me on this show, and
when I was a
here
kid, I
am.
used to work at over right before Halloween. I got a job at a place that made plastic Draculas for Halloween, and there was only 2 of us on the assembly line. I had to make every second. I had. I got the punchline.
You're gonna ruin
your
your
Oh.
show. Shut up.
Him.
You're blowing the punchline. Okay,
All right,
ready?
go ahead.
So I worked on the assembly line. There was only 2 of us that made these plastic Draculas. I had to make every second count.
So let's talk.
All right.
Come on,
You
Murray.
interrupted me on the punchline. Oh God! When you have to
Murray.
repeat it, it loses all its momentum.
We're gonna get back on track.
Let's
So
just-
let's
Okay.
Let's just revisit what Derek says. Joe's feeling a little feisty today.
let's
not
talk
hate on Joe.
some risk versus reward as it pertains to loans, because everybody knows that in their personal life, when you get your first loan or first credit card or whatever, that interest rate is a bit higher because of the risk that they're taking on a newer, younger individual,
Mhm.
which is the same for a newer, younger business.
Same
So
thing.
I know that there's a lot of small business owners out there that see that interest rate that they could get just using their EIN with little to no business credit established at that point versus the interest rate if they would personally guarantee the debt. Sometimes there's about a 2 to 3% swing in that. So
Sometimes it's more than that.
so let's talk about the risk versus kind of the reward. Like, do you feel that the benefits that are down the road for these small business owners would outweigh that extra few percent of interest on those first couple loans, and kind of just got to grit your teeth and bear it through those, and then do that? Or do you feel like those dual loans where they have the EIN but you're still backing, so it's kind of working for both, but you're at risk if your business went belly up?
I think
So much
that
thought. Go ahead.
that's really a personal decision. You're gonna have to run your numbers, because I would not want to make any recommendations on that. I mean, here's the thing: when you put your personal assets at risk, is you got 2 big things. That first of all, you got your own business risk, right? If you screw up, your personal assets are at risk. But you also have the risk of something like COVID, or in 2008, Kent would know very well, the real estate disaster. Even if you were running a good business, these external events could affect your business, in which case your personal stuff is at risk as well. Now, we just went through COVID. Watch the news and pick any of 75 different disasters that are currently on the edge of happening right now that if any of those go wrong could affect the economy and therefore your business that are out of your control, even if you're doing everything right. I
Mhm.
knew a guy, real estate guy, the guy who showed me this process that we have. He had $18 million of real estate assets. He was an investor and a builder and everything. He was paying all his bills. Everything was personally guaranteed, right? And he didn't know any better. And he was paying everything on time. He was a great citizen. He was very philanthropic, whatever the word is. He was very charitable. And he was doing great. He was recognized highly in the bank, but the 2008 crisis hit, and the government said, "Oh, we want to save banks. If you have real estate exposure, we'll pull back that real estate loan and we'll give you 70 cents on every dollar because we don't want you to lose the whole thing on some real estate speculation because the real estate market was hit pretty hard back then." And so one of his smallest loans of this $18 million portfolio, the bank pulled it. And he was totally on time. He was paying his bills. He was doing fine. And he couldn't understand. They didn't tell him about the TARP program. And that led to a domino effect. Within 6 months, he lost $18 million, even though he was paying everything on time. He had a great credit score, but everything was personally guaranteed. So the moral of the story is he was motivated never to personally guarantee a loan again. And he went on and he did everything he could to learn about how to build business credit against your EIN number. It just makes great business sense to have a good business credit score reflecting your company have a good score because banks are looking at that anyway. Even if they do make you personally guarantee a loan, they're pulling your business credit because it is public information. And, whether they tell you or not, they're using that as part of the equation in determining whether you qualify for a loan. So to get back to your question, Steph, my recommendation is if you have to personally guarantee some stuff to really make something happen that's crucial, I would think about doing it, but I would think in parallel, put together a strategy where you can build a robust profile on your EIN because it does take time. It's not instantaneous to build good credit. Our process, we can condense it down to less than a year. All right. But that's about as fast as you're going to get it. But you should be doing that in parallel because at some point you're going to want to look like Walmart. You're going to want to look, smell, feel, and taste like Walmart to the credit bureau. So you're going to get better terms and you can stop putting all your stuff at risk. And at some point, if you can get good business credit, you can start to refinance those business loans that are currently tied to your personal credit. You can kind of refinance them over to the business side because now your business qualifies for this type of stuff. I don't know if that answered your question. At the moment you're asking me, I would say it's definitely something you should consider. It's tough when you put everything at risk, but sometimes you got to do what you got to do. So I can't say never do that.
Speaking of good business decisions, one might be to work it out with your bookkeeper at stephsbookkeeping.com.
Well done.
And of course, if you need anything restored, fire, smoke, water, brain splatter, whatever the matter, check out Restoration One of Carrie. How about that? And of course,
that was pretty slick, Kent. Very slick.
It's those segues that I love. And of course, if you want to learn more about what Murray's talking about, look at the scroll right there. Go to www.trebouchersolutions.com or connect with him on LinkedIn. Just look him up. That's Murray Beaulieu, but it doesn't spell like Beaulieu. So look at the link. French.
That's why I go by Murray.
But listen,
that's it.
Listen, if you are out there too and you own a business and you're like, man, how can I be a part of In the Know with Steph and Joe? You can sponsor a single episode. They would love it. Be a sponsor. Reach out to info@216thenet.com and just put sponsor in the subject and say, hey, we'd love to sponsor an episode of In the Know with Steph and Joe. And we'll send you all the arrangements that need to happen. Good stuff.
So
That's a good investment, though, I would say, Kent.
I think
That's-
it's a great
let's face it. Come on.
It's a great investment.
Come on, Murray. All right, I believe it.
Murray, it keeps the whistle pig whistling.
I was gonna say, Murray, how would you invest? So, as a human that invested in a business, what? As a human. I was
He's feisty today. He came in feisty.
I'm tired.
Because he went to the island.
I did not go to the island.
But
I
he
got
went to the edge of
halfway.
the island.
I got into
Beaver?
Michigan. That's about it. No, Lansing.
Oh, nice.
So,
That's where I was
Murray.
born. I love Lance.
She's cute.
That's right.
Damn it, I lost it.
Hey, somebody put on APBD for his line of thought.
No.
I can't find it.
All points bullet in.
Murray, you walk into a business, as my wife and I did. One thing I want to say is, as somebody that walked into a business, my wife and I had no idea how to truly understand the line of credit that our business can secure before we even opened our business, right? So I'd like you to talk a little bit about that line of credit that you should secure before you even open your business.
But why do you need a line of credit?
Meaning, that's a great question.
Because I didn't.
We're
Kent
well
didn't.
behind. Oh, my industry needs a line of credit, so we might be well behind time frame on how much Murray can unpack this. And I wish we maybe would have started from it before, but my business, my industry needs a line of credit, and had we done it based off of our FEIN number instead of our FEIN number when we were 3 years into it, I would have been able to do it off of my personal. I would have been able to secure the lock based off my personal line of credit, not
Right.
my business line of credit, which would have been able to give my business line of credit a little more of a bump.
Before Murray answers that, my
God,
counter
my
counter
bomb at
to
the end of the
you,
show.
but my counter to you would be, if you needed in your industry needed to secure this line of credit basically almost prior to opening your doors or just as your doors are opening, then and you're going to put your personal assets at risk to do this line of credit, what's the ROI and the
on that line of credit?
right, like what would you have been able to do with your business to advance it? Like how much faster would you have advanced to the level you are now if you would have had that line, and how much would you have needed? Like that would be those questions you would need to ask, because to start my business, it costs me not even $5,000 because I just needed a laptop and my EIN and maybe a calculator, and I was good to go.
Love that.
So
What's your
like,
marketing budget?
So if you can do the numbers and say that if I get this line of credit, for every $10 I borrow, I can make 50 because of this is how I'm going to employ that $10. It makes a lot of sense to do it, but you got to know the numbers for it. You just can't.
right.
Debt is a two-edged sword. Kent will tell you this, right? If you're sinking, it's going to make you sink faster.
Right. I just have seen so many small business owners take out loans, take out lines of credit, take out SBA loans, take out whatever was afforded to them, take out credit cards. And then they didn't know how to take that monies and then translate it into money generating items.
Cash flow and profits.
I mean, during 2020, we did not triple P at all. Right. And the reason is we kind of read through it, and we were in a position like, listen, you're going to be in debt for a long, long time if we triple P this. Right. And at the time when we were going through it and made the decision not to get into that debt, we had no idea that the government was going to be like, oh, just keep it.
Right.
Hey,
Good luck.
forget about it.
Hey,
right?
Roll the dice and you're good to go.
So here in our business, Pete and I, we talked with Steph a little bit, and we're just like, you know what? it doesn't make sense for us to go after that because we certainly don't want to be in that debt, right?
Yes.
Now, after they forgave everything, we're like, oh, son of a stop. We should have took it, right? But hindsight's out. You look at that, but I'm
2020.
but I'm still okay because it gave a lot of businesses a false sense of inflation in their numbers,
Yes. Yes.
as far as profit and whatnot. And it was just really Pete and I. So we really didn't have like employees. So we're just like, yeah, we'll be fine, right?
Right. Because
And it is, it is a double-edged sword, as Marie says, and the banks don't care, right? The banks got you on the hook, and they'll come after you, and they don't care that your kids will be homeless. You're going to give us what we owe.
Well, another thing that the banks are considering now too is everybody that took those EDIL loans, those emergency relief loans, the SBA filed a UCC against your EIN.
Yeah.
So now they're in first position. So if you try now to go get a loan or a line of credit, they have to file the, what is that called? The subrogation,
Subrogation.
right? No, what is it called?
Hold on.
Subrogation.
Well, whatever. They have to file.
No, it's subrogation.
They have to file the form for them to get first position, and the SBA. No, so they have to file the form for. So they have to file the form for the SBA to move from first position to second position, so the bank can take first position. So that's another thing that's hitting a lot of these small business owners that they were not prepared for, because you took these loans out in 2020. You just had to start. You were just starting to be now obligated to start paying on them. And those forms that you file take approximately 30 to 45 days to move.
And Murray, you help people all across this nation, right? You're not just a local guy. I mean, you can.
Yeah, we can handle anybody in the U.S. You get the only stipulation is you have to have an EIN number,
right?
And so, and you can be a startup, or we have a client that has 200 properties in Wisconsin. So there's no limits either way. It's just a matter of whether you think it's economical enough, worth it. If you can get the ROI, I'm going to argue yes, but anywhere in the U.S.
Yeah, and I mean it's so important because in your time, even Joe, your time being in the insurance industry, your time as a bookkeeper, we've seen people put in their personal guarantee, and the business failed, and now they've lost everything.
Well, now it's like a bankruptcy across business and personal, and now
correct.
And then
I will agree.
People could always dig out and rebuild and reestablish, and it's not the end of the world. It's just that if you took the time, as Murray said at the beginning of our show today, to get the EIN, you have that limited liability, you have that protection, you should take full advantage of that and use that, to protect yourself.
Hang on. Many people, though, don't want to use that as their protection. They want to use.
Who doesn't want to use that as their protection?
I don't know anybody who wouldn't.
I know some people that are like, no, don't care. I'm just going to pay cash and I don't want to put it on my business.
I'm just saying that if you went and got an EIN number and you have that level of protection when you go to get loans or lines of credit and all of that kind of stuff, then you should use it to its full advantage. Because why did you do that if you were just going to allow the corporate veil to be pierced and put yourself and your family and your household at risk if there was a situation where there was
and letting it pierce.
If there was a situation like Murray described with the COVID and the 08 crash and these things that were very unforeseen to a lot of individuals, but also
external factors.
Owners.
Yep.
Correct.
So those things are there to protect you. So
that's right.
You should utilize services like Murray's. Like, for example, I think I'm not 100% sure because this is old information, but I believe that Staples had a credit card for a while that did report to Dun & Bradstreet.
Can we talk about that? Yes. Yeah. Can we talk about that? That's part of my spiel. That's a very good point.
Yeah.
So there are personal credit cards and there are business credit cards. And there are corporate cards. Let's talk about that. So we all know what personal cards are.
Murray,
go to
we got about 5 minutes.
Okay, you can go to Staples, you can go to Home Depot and get a business credit card. Okay, and it says business on it, and it has your name on it. But when you sign the application, they're asking you for your social security number. So the fact that it says business on the credit card doesn't make it a business credit card. If you sign your social security number on the application, it becomes a glorified personal card, and they don't report. Now we have a partner who does have a Home Depot business card that you apply with your EIN, and they do report, and it's a net 30 account. In business credit, if you pay early, it does help your score. In personal credit, as long as you pay on time, you're good. In business credit, if you pay early, it'll help your score. So you can go to the same store and get different cards, and you think you have the right card, and you don't. American Express has a business card. They advertise it all over the place, and it says business card, but it doesn't report, and you have to sign your social security number. But once you get to 80 on the credit score, we told you 80 is the sweet spot. Suddenly, you get offers from them for their corporate card, which does tie to your EIN, and they do report. So doesn't it piss you off? They don't help you get there, but they welcome you to join the club when you are there. Yeah. And so that should be a red flag for everybody about the nuances here.
No country club.
Yeah, I was going to say, Murray, how much do you pay attention to this crap that's coming in from your business line or your business contract?
That's what he does.
Well, I understand, but how much do you tell your humans that you deal with? Because I could care less. However, I really probably should be paying attention, shouldn't I?
Well, because if you have a credit card that you guys use for your business,
and we do,
if it's not a corporate card,
and it is
potentially, like, let's say your employee runs up $100,000 on that card,
and they could.
It's against your social security number.
That you and Carrie would be liable for that personally, because your social security numbers are tied to it, even though it's business related expenses.
Oh, no. Yeah,
if it's not a corporate.
See, this is where we're getting at. All right. So what did we learn today?
There we go.
Oh, yeah. I forgot, Murray. The last 3 minutes of the show.
No, bro.
We do. What did you learn today? So each person goes around and says something that they learned during the show. It could be something funny or something actually pertaining to the topic.
So I learned how much does the contract really matter? And it matters because if it's not in your personal or corporate name, it is a big difference. I.e., I will make sure that everything is in a corporate name,
personal.
It's under, I'm not signing things. I may sign Joe Turner, but everything is the corporate name, right?
I learned today that if Joe just steps foot into the motherland of Michigan, he gets a little juice in his britches and comes in a little bit feisty.
Well,
yesterday,
he can't wash it off, right?
I'm gonna counter you, Kent, on that.
Steph gave me goddamn high noons.
What did I learn today is a counter to Kent's, because Joe isn't partaking in certain activities in this new truck, which is causing him to be all sassafrassied up.
Oh, that could be.
I really am not allowed to.
See, that's what I think it is. But Murray, what did you learn today?
Murray,
I think Joe should be a nonprofit business consultant. I think he's a slam dunk.
If we only could.
Listen, as we're wrapping up, just one more time, and Murray, really, we know you're busy, and thanks for your time. Check him out. If you want to book a call with him, go to www.treybouchersolutions.com and or connect with him on LinkedIn at linkedin.com/in/Murray. Beaulieu, and he's great. If not, just reach out to me because Murray and I have been doing some business together for a while. I absolutely love the guy. Thank you for spending a little bit of your Friday afternoon with us.
Sure, my pleasure.
Gabby says, I learned today that I might need a separate credit card to use for my business expenses. Yes.
Excellent.
A good way
point,
to
Gabby.
keep that wicked sense by Gabby is to reach out to Murray, and he'll help you improve that EIN score so that you can get that. Yeah.
To be honest, the EIN is really everything your business is based off of, and
Right.
I'm sure you only say, the more years you can put under it, the better.
Yep. If you sell your company, there's a way to transfer at some point you're going to retire or you're going to transition, right? There's a way to attach the EIN with the sale. If you build a robust credit profile against your EIN, do you think it's going to make your company more attractive to a buyer?
Absolutely.
That's my question.
That's
if
huge.
you don't, if you have personal loans against your business and you try to sell it, is that going to be attractive to a buyer? No, you're going to have to pay those off yourself. The business owner, the buyer is not going to take on your personal loans. So I just throw that out there to think about.
Yep. Hey, for all
love
that.
Love that, Murray. Thank you.
216 Creator Studios. Thanks for spending a little bit of time with us. In the Know with Steph and Joe. We'll be back next Friday, as we are every Friday. But until then, be good. It's St. Patty's Day weekend. Go watch them dye water green. Have fun, but be safe. But more importantly, be good to one another.